Hello, hello. Can everybody hear me all right? If you can type into the chat box down there on the right. I'll explain how this is going to work here in a second. But thanks for those who have shown up already to the quarterly webinar. There will probably be some few other people joining in, hopefully. All right, Sharon, thank you for pointing that out. So I'm Mike Holmes. I'm with the Economic Alliance Greater Baltimore. I'm the Research and Market Analyst. I'm joined here with Patrick Doherty, who's the Research and Business Development Associate. Patrick will be helping me field some questions, so if you hear him shout every once in a while, say, hey, there's a question from somebody in the meeting. That will be his role. So if you want to ask questions, you can type questions into the chat box. I think you can see my mouse, so the chat box on the lower right corner here. Just ask a question and we'll try to answer them throughout as well as we can, and if not, there'll be some time afterwards to discuss and ask questions, and we certainly encourage it throughout the presentation. So today we're going to be discussing our regional economic update and our most recent IT report. The regional economic update is released quarterly by the Economic Alliance. We've started doing it regularly again in January, and essentially it tracks Greater Baltimore standing across the top 25 metros in the U.S. And we try to use the most recent data that's available. So if you see some things that look a little bit older, and realizing that it's October now, just realize that data lags, and that's just part of the nature of the beast. So like I said, you can see the list of attendees in the top right. And then in the bottom right, there's the chat box, so please use that for questions, and we will try to field them as best as possible throughout. So with that, let's get started. So diving right into our regional economic update, as I said, we try to track our standing across the top 25 largest metros in the U.S. As you can see, that puts us at the 20th largest metro at 2.7 million people in the Greater Baltimore area, which is defined as Baltimore City and then the 6 surrounding counties around Baltimore City. That puts us in a certain peer group with other metros like San Diego, Tampa, St. Louis, Denver, Pittsburgh, Portland. So just an idea of the relative size of our metro compared to others in the United States. Population growth, as you can see, most of the more established older East Coast metros like Philadelphia, Boston, New York, and even the older ones out west like San Francisco tend not to grow as fast more recently. You see a lot of that growth primarily in the south and western markets, but the area is still growing, not quite at the pace of the U.S., but it's still a growing area, and faster than places like Philadelphia, Boston, and New York. Here's our current unemployment rate, most recent as of August 2012. We are in the top 10 in terms of lowest unemployment, which is generally a good indication of an economy that's doing pretty well. As you can see, neighboring DC has the lowest unemployment in the U.S. Unemployment is down from the last year, and it's lower than the U.S. average. However, it is up from May, which was at 7.1%. But that's indicative of the trends nationally. So we're still in pretty good shape in terms of employment and unemployment. Looking at employment growth, you can see that we're experiencing a pretty stagnant time, both nationally, but particularly locally in the Baltimore region. Over the past year, we've only gained a half percent in employment, which is lower than the already low U.S. average. But as you can see, many other markets in the U.S. are also struggling to grow their employment base. This is a much more recent trend. As you can see, we're in the top 10 for employment growth in the past decade, and growing about 1.5 times as fast as the United States. So it'll be important to watch this moving forward. And again, we're not losing jobs per se, but we're not creating. So it's definitely gonna be an issue to keep an eye on. And it's also important to see why and where, which leads us to the next slide about employment growth by sectors in our local economy. Sorry. Again, as you can see, our total employment growth in the past year is at 0.5%. But the good news is we're still growing in some good sectors, good key sectors. Traditionally, you hear about eds and meds and feds in our case. And we are still growing in education, healthcare, and professional scientific and technical services, which we'll get a little bit more, we'll dig a little deeper into later, but that tends to be an economic sector that attracts a lot of young professional talent, technical talent, IT, and we'll talk about that also some more in the IT report. But you can see that we are declining, unfortunately, in some large sectors of the economy. They're not necessarily sectors that we're concentrated heavily in, more so than what you would expect from another metro in the U.S. But some of our large sectors, like retail trade, which is the second largest sector in our local economy, is down. Leisure is down. The federal government, which is a highly concentrated, actually the most highly concentrated sector here, is also down. So that's what's really dragging down that total employment growth, is that some of these large sectors are falling, but they're also falling nationally. So there's sort of that caveat that goes with it. But when you look at our growth over the past decade, you can see that we're growing in those strong sectors like healthcare, education, federal government in our case, local government, etc. And we're declining in some of the more traditional industries like manufacturing and transportation. And so here's some industries that we're concentrated in. How we explain concentration is with the term location quotient. That's what that U.S. index means on the tables there. A location quotient is a valuable way of quantifying how concentrated a particular industry is. It helps you identify clusters and helps you use that as a useful comparison to what you would expect from a typical metro in the United States. So a score of 1 on that U.S. index means that's essentially what the U.S. average is. And so anything above that means you have a higher concentration than the U.S. average. Anything below that means you have a lower concentration than the U.S. average. And as you can see on the chart here, this top group are the ones that were most highly concentrated, and that's anything over a 1.1 index. And the federal government, I think, is of no surprise to anybody who knows much about the economy in this region. But some highlights really there, like I said, the educational services, the professional science and technical services, and then the healthcare and social assistance, which have been growing both nationally and tend to be your high wage, high growth jobs. Again, you can see that we are a market not very concentrated in things like manufacturing and transportation, despite those being some of the more historic highlights of our economy. They've definitely become less important. I shouldn't say less important, but less concentrated in the modern economy. Breaking out that professional, scientific, and technical services box, you can see that we're one of the strongest in the U.S. and have one of the highest concentrations in the U.S. Does transportation include the port? That's a good question. I would imagine that it depends on the activity. If it's warehousing and that sort of thing, it's probably in warehousing, which would be, I think, technically under wholesale trade, but I'm not 100% sure. I can look into that. Do you know, Patrick?
I'm sorry, I don't.
Oh, okay. And then, but some of the activities rated around the port, like CSX activity, and I think probably your typical longshoremen and those people who work in that regard would probably be in transportation. So while we're not heavily concentrated, a 0.84 doesn't mean that we're low concentration compared to other parts of the country. But I think what a lot makes up that industry are like trucking and that sort of thing. So we'll see with the expansion of the port if that changes in the coming years. That's an interesting thing to keep an eye on. Other services are things that are just not captured by your typical healthcare services, your education services. I'm trying to think of a good example of what falls into other services. Would you have any idea?
Off the top of my head, it's really just seems like a catch-all that the BOS uses when things just don't fall immediately into it.
Yeah, it's not a very large part of the market, and so in fact the concentration is, I don't want to say it's meaningless, but the other services is, like Patrick said, is not something that is caught within the professional, scientific, technical services, educational services, healthcare services, etc.
Personal services.
Oh, okay, yeah.
Thanks to Nancy for pointing that out.
Yep. Yeah, thank you, Nancy, for that. And so yeah, It's not a very substantial part of the market anyway, as are some of these other smaller categories that you'll see. So the concentrations, I don't want to say that they're meaningless, but they lose a little bit of that explanatory value. But getting over to professional, scientific, and technical services, I was saying we have about 47% more employees in that industry than you would expect from the U.S. And we're sixth in the nation. It puts us in good company with some of the other metros like San Francisco, San Diego, Boston, DC. Those are typically your. Do engineers fall in that? But anyway, I was thinking about your IT workers, your legal workers, business services,
lawyers,
etc. So moving on to a spotlight on PST, you can see that we are one of the fastest growing in the past decade and in the past year, and it's a very strong growth in the U.S. 20.1% over a decade is quite high compared to other industry sectors in the U.S. So Baltimore is growing over 6% faster than that, and then over the past year they're growing 2% faster than that. So it's not just a strong industry sector now, but going forward, it seems like it's continuing to grow at a faster rate than expected. So changing gears into some of the more demographic type data, we are in a region that tends to pay more, and what I mean by greater region, like your East Coast megalopolis area like Boston, New York, DC, these all tend to be high wage areas, and Philadelphia as well. And so we're in that group with those. But I think what's very interesting is if you look at that 46% change right here, that's actually the fastest growth since 2000 in per capita income. And that probably has a lot to do with growth, with our very high growth in those industry sectors like education, healthcare, and professional, scientific, and technical services, and moving away from some of the lower wage industry sectors. And as you can see here, also there's a very high median household income, fourth in the country actually. So looking at the housing market, you can see here that we're pretty much in the middle of the pack with the top 25 metros in terms of foreclosures in 2012. And again, the data is a little bit older from March, so it'll be interesting to see when the newer data comes out, since there's been a lot of speculation about a rebound in the housing market, how those numbers will change. But we are experiencing an uptick from the year before in the foreclosure rate, but that's not uncommon in the U.S. In fact, only 6 of the top 25 metropolitan areas experienced a decline or stabilization in foreclosure rates. So it's definitely part of a national trend. And then looking at median home prices, this is where I was talking about. There seems to be somewhat of an indication and a rebound in the market. This amount is up about $40,000 from the quarter before Baltimore's median home price, and so that's definitely an indication of a rebounding market. And in fact, it's $40,000 is quite a bit compared to, or is $255,000 is quite a bit compared to the $210,000 that it was before. As you can see, there was an 8.6% growth from the past year, and for the first quarter since we've been tracking this, there's actually been a long-term three-year growth. So we finally rebounded to those levels of 2008, 2009, and so it seems like we're starting to dip back out, and that's also indicative of a national trend of 7.3% in the past year and 5.5% over 3 years. Another interesting point about the median home price is that we're actually lower than most of the other East Coast metros, about 100,000 lower than places like Boston, DC, New York, etc. The only of this megalopolis area that Baltimore has higher home prices is than Philadelphia, which I believe is around 240,000. So you're in a great region, and you actually get a lower cost than, say, a neighboring metro like DC. So talking about venture capital, we'll actually get into a little bit more of the specifics in VC and how it's affecting the IT market specifically when we talk about the IT report. But I think some of the highlights put on this table, which might be a little difficult to see the numbers, but there's a growing share for Maryland in the IT services. If you can look at the 97 to 2001, 2002 to 2005, we were only getting about a quarter to maybe 27% of the IT services venture capital. But if you look at 2007, 2011, we actually pulled ahead of Virginia. And I should clarify that these are the 3 states that are involved in the DC Metroplex, which is defined by PricewaterhouseCoopers as DC, Maryland, and Virginia. So this slide is important to point out how Maryland is actually gaining its share of venture capital in certain areas. If you look at biotechnology and healthcare services, we've continued to dominate as we always essentially have according to this time series data. And then in total venture capital, it's pretty much a rough split between Maryland and Virginia in terms of who is receiving the most venture capital dollars. If you look at that 2012 column, the numbers are so few and far between that it's really not telling us much, but that's the most recent data available. And here are some of the recent rankings in Greater Baltimore. As you can see, we're continuing to be named one of the top places to work. Not on this chart are some of the ones that we've been called some of the top places to live. As some people know, Fells Point was just named one of the best neighborhoods in the country. It's a great college destination. In the quarters past, we had been named one of the best places to buy a home right now. So there's some other quality of life things in here as well. But one of the things that I found particularly interesting is that first table in which we're one of the best, we have one of the lowest unemployed people per job posting, and that's actually about a one-to-one ratio. So for every job posting that's out there, there's a person that has a job, whereas some there's 3 people looking for 1 job, whereas here it's about a 1-to-1 ratio, which is much better than a lot of areas in a lot of other places in the U.S. And here are some of our top headlines. Again, not to look through all of them. There's a lot there, but it's just basically to show the extent of the good news that we've been receiving in the region in the past quarter. This is just from August, and we've seen some great things happen, like $23+ billion in mergers and acquisition deals in the Baltimore-Washington region. We were 4th in MBSA jobs. We're a top 5 college destination, as I pointed out. We're a top 10 metro for home affordability. So it's definitely something to note that we've been garnering a lot of national attention. So moving into our information technology report, this was just released within the past few days. I'll show you how to download it at the end so you can get the full report. But this is some of the top information that we pulled from it. It's essentially we've been seeing all this positive momentum. If you notice on the recent rankings there, where we were named one of the top IT markets, and that's been consistent with the way we've been. That's been ongoing for the past year, maybe 2 years of being having a lot of attention pointed at us for our IT market. And so we started to think, well, why is this specifically, and how can we quantify and explain where these positive rankings and attention are coming from? We've also seen an uptick here in Maryland and some prospect activity regarding information technology, and we were pulling together a lot of this information, so we figured it would be worthwhile to share a lot of that information with the public. So like I was saying, here are some of the most recent headlines. We were fifth best market for job growth. Fast Company called us a thriving tech hub. The U.S. Chambers named Maryland #1 for entrepreneurship and innovation, which a lot of that has to do with IT, but also in the biosphere and so forth. And Bloomberg Online recently called Fort Meade the Baltimore area, but because of Fort Meade, a startup hotspot with a lot of the technologies that are transitioning from the federal sphere to the commercial sphere. And we'll talk a little bit more about how that needs to continue to happen going forward, but that's definitely a good news story in that regard. So here we define the market. We try to define the market in a slightly different way. As you can see, the Baltimore MSA and the DC MSA are adjacent. They're very close to one another, but you could sort of define the market in different ways because we're part of a larger ecosystem. There's a lot of activity that's going on in DC and going on in Baltimore, and there's that dividing line. But really, when you actually talk to people who are in the industry, talk to employees in the industry, there's so much fluid movement of the labor pool. There's so much fluid movement of firms and communications, partnerships, etc. We're really part of one larger ecosystem here. The Baltimore MSA is made up of Baltimore and the surrounding counties, and the DC MSA is made somewhat of, as you can see in the yellow, the Maryland DC suburbs, the purple, which is DC proper, and then the green, which is Northern Virginia. And they're both often highly regarded as great IT markets, but we wanted to figure out a little bit more about how they work together and if you actually combine the two, what this market really looks like. So as you can see here in defining this fluid relationship, there's quite a bit of commuting that goes on between the two regions. They share large portions of the labor pool, and in fact, 118,000 people commute daily from the DC metro area to the Baltimore region for work. That actually accounts for 10% of the Baltimore labor pool. So it's a pretty significant portion of people coming from that statistically defined MSA to our statistically defined MSA. A third of people from the yellow region, the Maryland suburbs, actually work in the Baltimore MSA as opposed to what they're traditionally associated with, which is the DC MSA. So that is actually a very important part of the greater Baltimore economy, considering that a third of the workers in that region come to our metro as opposed to stay in the DC metro. And because of this, for much of the analysis, we try, when possible, to include those Maryland DC suburbs along with Greater Baltimore to actually talk about this section of the Greater Baltimore DC market. How people get around, I think that the biggest ones are probably the MARC train and driving, but as you can see, there's a plethora of options for people to get to and from the region. There's several highways that connect the area. I noted the MARC train. Amtrak is very popularly used, and these three major airports are generally shared by the market. It's not called the Baltimore-Washington Airport for nothing. So there's definitely a lot of activity going on between both markets in terms of moving around. So getting to the overview of the market, we share a lot of the key sectors, and as you can see in these two tables, who the top IT-related firms are in Greater Baltimore and who the top IT-related firms are in Greater Washington, they don't really look that much different other than the number of employees and how they're shuffled around. There's a lot of familiar faces. There's a lot of companies working in the same industries. Actually from the same markets or from the same companies. So it's pretty indicative of the joint market that we have here. So from this, we actually wanted to see to see what this market is made up of, how many people are here, how concentrated we are, etc. And how can we quantify that? So we started by looking at industry employment. There are some issues with industry employment because it essentially means the total employment or concentration based on the type of work a business does, as opposed to what an individual employee does for that firm. So therefore, a secretary or an accountant that works for an IT firm or a PST firm, as you can see on this table to the left, will actually be counted as an IT employee. That tells us a little bit, but it's casting a little bit too wide of a net, and we can't really understand what that is. But it's still worth noting from this that we're talking about very high concentrations in PST, which we noted it doesn't just include IT workers, but some other people. And if you look at this computer system design and related services, which is the most common IT-associated industry sector, Baltimore and Washington, and then if you include those Central Maryland DC suburbs, is pretty much second to none in the firms that employ people in that industry. So, like I was saying, it's probably more important to then look at occupation. The better thing about occupation is that it actually looks at what the employee does and not where the employee works. So many large financial service sectors, legal teams, whatever, etc., probably have an IT staff, or they contract to an IT staff or whatever. And those people in the industry picture would be included as a financial services employee. So we actually looked at 13 different occupations, which you'll see on the next page. But to try to gauge the size and the concentration of the market here. And what we did is we looked at consolidated metropolitan areas, which would be Washington, Baltimore would be one, as you can see, combining San Francisco, San Jose. And so it's not just San Francisco or San Jose, it's that combined market, Raleigh, Durham, etc. And the 21 largest CSAs are the CSAs that are made up of the top 25 MSAs that we use for our normal comparison. And really what you see here is that we're second most concentrated behind Phoenix, an area in which we have much more employees than, and we're second largest behind New York City. I think it'd probably be surprising to a lot of folks that we have more people working in IT occupations than Silicon Valley, which would be traditionally defined as San Francisco, San Jose. So really, this market is essentially the premier, but among the premier markets in IT as far as workforce is concerned. Here you can see the 13 different occupation codes we use, and again, if you look at the report, there's full explanations of what these actually are. But this table breaks down where in the greater Baltimore-Washington market people are actually coming from. And a little more than a third of them are coming from this greater Baltimore, Central Maryland region. And so here again, it's just a breakdown. 37% come from here, and 50% come from Northern Virginia and Southern Maryland. So in looking at this, we started wondering, well, what makes this such an attractive IT market? I'm sure we have a lot of employees, there's a heavy concentration, but what is it about here that is special and unique and also different from some other markets? What's not different, as you can see, as far as a market like San Francisco, is that we are very highly educated. We have one of the top metros and regions for bachelor's degree and higher. We're one of the top metros and regions for graduate and professional degrees. So having such an educated workforce has much to do with firms wanting to locate in this region. And our degrees and programs, as you can see, it's old data, unfortunately, on the table on the right, but it's the most recent from that compares multiple markets. However, if you combine the Baltimore and Washington market, there's no other market in the U.S. that can compare to the number of degrees that are conferred in computer and information science. If you look at the table on the left, we continue to confer lots of IT enrollment. This comes from the Maryland Higher Education Commission data. And as you can see, there are over 14,000 degrees conferred in the past 5 years, and there are 17,000 currently enrolled as of 2011 in IT-related fields. So it's definitely continuing to be a place where people are getting educated for the right jobs in the market. And from that, the last table actually did not include the community college network. The Community College Network serves over 140,000 students annually in a variety of fields, but now they are beginning to offer specialized training assistance in cybersecurity and IT-related fields. They've begun a lot of 2+2 programs with the major universities to get students who either traditionally either want to save money or wouldn't think of going in such a profession are able to do these programs with the four-year degree institutions. And there's also some innovative things going on in our universities. University of Maryland, Baltimore County, Johns Hopkins, Loyola, and BCCC all have specialized degree programs, mostly related around cybersecurity and our information system security and homeland security. So the key takeaway from this is that our universities have become a model for how to adapt to the changing job market and the changing market in IT. They're actually going out and talking to whether it be the defense agencies, whether it be the contractors, whether it just be other folks in the commercial IT and cybersecurity field. They're figuring out what skills these students need in order to be successful in that market. And they're doing a very good job, and we're actually on the forefront of a lot of those educational fields. We as in Maryland and we as in the Baltimore region have traditionally received much more SBIR and technology transfer awards than a lot of other states. California tends to lead in that, but it's also a very large state, so that has a lot to do with that. I mean, considering the other states that are on this, Maryland has a much smaller population and is receiving much more total dollars in SBIR and STTR, which are technology transfer awards. If you look at the table, over $1.6 billion have come from the two awards to the state of Maryland. And if you look at the table on the right, two of our area universities are top in research expenditures in computer science. So they're continuing to innovate. The universities around here are continuing to work in research and development to make sure that we're a top area in technology. Venture capital is one of the more interesting aspects of the IT market here. Washington, Baltimore is actually one of the top markets that receives venture capital funds and gets venture capital deals. But we do dwarf in comparison to areas like San Francisco, Boston, and New York, which is a small bit of an area of concern. But there's also a good explanation for that, which is the next slide here, which is our federal government presence. That huge gap is generally made up from grants from federal government agencies, contracts from either the Defense Department or different agencies in the government. So we're very heavily reliant on the federal market. I mean, it's good and bad because the federal government's not going to disappear, but it makes us subject to some fluctuations in federal government budgets. So how we are able to transition either workforce or what our firms are performing in IT from federal government to the commercial market is going to be interesting going forward as some of the speculation about federal budget cuts begin to happen in 2013. So with that, we have to look ahead. I mean, what does all this mean for the future? I mean, essentially, we are a part of a premier IT market, if not the premier IT market, in my opinion. We're different than what they do in New York and San Francisco, but it's certainly a place for IT professionals to come, and that I think is what has been driving a lot of the recent national attention in terms of how we're one of the best places for tech jobs, one of the best places for tech employees, one of the best places to get educated in that regard. The balance between the government and commercial is really what's going to be crucial moving forward. If these large budget cuts that are often thrown around do actually occur, it's interesting to see how that's going to affect our local market, how we can transition. We know it's going to happen, but the scale in which it's going to happen and how it's going to affect IT is interesting because many of the IT operations, grants, contracts, etc., that we do in Maryland are considered mission critical. They're in growing areas like cybersecurity, which the president has noted is going to be a focus going forward. So while other parts of the Maryland economy might be heavily hit by sequestration and federal budget cuts, we're not really sure how that's going to affect the IT market, but it will be interesting to see how that happens going forward. Our university and colleges, like I said, are on the forefront, but they need to continue to evolve. They need to make sure that they're working with not just the federal sector, but the commercial sector to see how we can employ professionals in either the cyber market or in some of the other key sectors like we have, like gaming and data centers and network security and those sort of things, and making sure that our programs are reflective of what's needed in the market. Education technology is actually an interesting development that's going on in our region. We've been named as one of the regions that are sort of on the forefront of that activity in education technology. And for those who don't know, education technology is essentially the combination of learning with and about technology. Not just sitting in a classroom and somebody telling you here's X, Y, and Z with technology, but you're actually learning with the technology that you're going to essentially be using, and it's going to be crucial in enabling current and future entrepreneurs and innovators to adapt to the changing needs of today's information economy. And we actually, just a shameless plug, we have an education technology white paper that is available on our website, and I will show you in a little bit how to access that publication, this IT publication, and our most recent quarterly economic update. But also the financing and venture capital, they need to increase. We need to figure out how to get more tech transfer opportunities coming out of the great research that's being done in our universities. We need to figure out, for people who want to branch out of the private sector or want to branch out of working for the defense or the agencies, we need to figure out ways that they're able to get the money they need to start their companies, whether it be contracting companies or it be something that's for the commercial market. So it'll be interesting to see how that changes going forward. With that, I'd like to open it up if anybody has any particular questions or comments. If this has made anybody think about anything in particular that maybe we missed or that we can all continue to talk about.
Nancy would like us to talk about construction outlook. She noticed that it grew at only 1%.
Yeah, actually, I did mean to make a comment about the construction outlook. I can go back to that page. Thanks, Nancy, for bringing that up. Let's see if I can find it here.
There you go.
So yeah, the construct. What is that? Oh yeah, it grew at 1%, which actually it isn't really bad news per se, because we've been seeing construction decline for so long. Seeing a rebound in construction is indicative generally indicative of an economy that's building and growing and changing. But until we have more long-term information about that rebounding, it's going to be hard to really tell if that's indicative of anything, or if it's just a blip in the September quarter, as opposed to different times of the year. Strategy on manufacturing. Are we devoting resources to that? We've been working very closely with RMI and Mike Galazzo, if I'm saying his name correctly, and figuring out ways that we can work in advanced manufacturing, figuring out ways we can draw a lot of attention to that. I do know that the greater Baltimore and Maryland region is on the forefront of things like advanced, what do they call it? Like the megawatts. Yeah, and additive manufacturing. So there's a lot going on in the university network at Towson University, et cetera. That's an interesting thing for us to maybe focus one of our next reports on. It's definitely worth consideration, because there's a lot of changes and evolution going on in that industry, despite some of the declines that we've seen recently in terms of employment. But we're seeing a lot more efficient uses in that industry. Some people are typing, so I'm going to see if they have any more questions or comments. And regarding manufacturing, that there is an industry profile, and when I show you our publications page, I'll show you it's from the beginning of the year, and we plan on updating that in the next few months. But that we have devoted an industry profile to profiling some of the good things that are going on in manufacturing in Greater Baltimore. Some of the data is available at the county level. A lot of the BLS stuff is not, but you can get essentially the same information from the county business patterns. It just tends to lag about a year behind, and a lot of it seems to be, in my experience, and Patrick, you can probably attest to this as well, unavailable. So when you really want to dig into markets, you'll have a little character that says somewhere between 20 and 99 employees, and it's like, well, that doesn't necessarily tell me.
Right, and a lot of the time, because counties are so small, people come and go from Howard County or Baltimore County to work and to home. So the county data can be a little unreliable and with comparison to the regional data.
In terms of the occupations that we looked at, there really isn't any way to look at the county data in any way. The BLS is the only one that really tracks occupations, and they only do that at a regional and state level. Yeah, and definitely, as Bill pointed out, which I should point out, our recent port study as well. Again, that'll be on the publications page that I show you. But we're optimistic about the effects and the economic impacts of the Panama Canal expansion and the possible pending new intermodal facility, and what that's going to mean for transportation and manufacturing jobs in the region.
I'm going to pull our files that we have available to download over. That's the quarterly economic update, our paper on education technology, and the information technology report that we've discussed today in full report form rather than in this presentation form. Everyone's, of course, welcome to download those as well.
Very interesting question, Chris. I don't think that we lack venture capitalists in Maryland, at least from the way I understand it. I think it's a lot of not investing in Maryland. Tom used to throw around a a stat about 90% of VC investment in this area comes from outside of Maryland, and 90% of Maryland VCs or a large percentage invest outside of Maryland. So it's definitely, I'm not really sure what the issue is, if it's making better connections with the Maryland venture capitalists, if it's something that we need to make connections with Maryland venture capitalists, or outsiders, you know, doing the job. I think really what it is here is less of a need for venture capital because of the large federal presence. I mean, I think that tends to be people's de facto is, can I get money from the government? Can the government give us contracts? Whether or not that's going to change with sequestration, it's going to be interesting to see. And thanks to Chris for pointing out our annual meeting, which is coming up. If you have not, please register for that as well.
Cuban up there.
And if anybody has any thoughts or comments on some of these questions as well, I'm certainly interested to get other people's perspective. In the meantime, I'm going to show you guys on the website how to access our publications page. Oops, I wanted to share this one. You guys seeing it?
Mm-hmm.
Oh. All right, yeah, you're gonna have to click on that to bring it full screen. But here's our website. If you guys have not been to it, I'm assuming you have if you've registered. But from here, if you go to our research tab, you can go down to our publications button here, and that has all of our publications to date that we put out recently. That includes the Port of Baltimore study that we had just talked about that was released a couple weeks ago, in which we worked with Towson University on to do an economic impact study on the effects of the Panama Canal expansion and the increase of activity at the Port of Baltimore. We have an education technology white paper that Patrick put together that can give you a lot more information on what education technology is and what it holds for the future of the IT community in Greater Baltimore. And then also the information technology report that we discussed in the presentation. Also, we have our industry profiles down here, which are from very early in 2012, and we hope to be updating in the next several months for next year. And also the quarterly economic update you can download in full form. All right, well, if anybody else does not have any questions, we'll leave the room open for a while in case you want to download some of those files. We'll be here for a few if anybody has any afterthoughts or questions and they haven't taken off yet. But if not, thanks for everyone who attended. This will be recorded, and we're hoping that it's being recorded. We haven't exactly done it yet, but it's being recorded and will be online sometime in the near future if you want to share with anybody else who wasn't able to attend, or if you want to watch it again and get caught up. So thanks again for attending, and we plan on doing another one of these sometime in January for the next quarter. So thank you very much.